5 things you need to know about healthcare reform in 2014. Not this year, not next year, 2014. That's when the main provisions of the law are going to take effect. So we're all aware that just a little over a month ago, the Supreme Court decided to uphold the majority of the Patient Protection and Affordable Care Act, otherwise more affectionately known as Healthcare Reform Bill, that was signed into a law several years ago. While everyone may be aware that this law has been validated by the Supreme Court and the constitutionality of it has been upheld, a lot of people still don't know what and when these new laws are going to take effect and what they're going to do. Now, some of the regulations that are already built into the law have been in place for some time now. Some that took effect relatively right after it was signed into law back in 2010. However, the main event of the healthcare reform law and reform really isn't going to show up until 2014. I talk to people on a daily basis who say, well, what about Obamacare? Am I getting this coverage now? There shouldn't be any problems. A lot of people are not aware that these things do not start until 2014. I've got 5 things that I want to highlight for you to make sure that you're aware of that are going to take effect come January 1st, 2014, that are going to directly affect health insurance in this country. First, no more being denied for pre-existing conditions. Again, starting on January 1st, 2014, health insurance companies will no longer be able to deny you coverage for a pre-existing condition. The law also eliminates their ability to charge higher premiums based on gender or medical status. What does that mean? Obviously, on the surface, these are much needed changes for our healthcare system. There are 2 main things that you're going to want to keep a close eye on as a side effect of this new regulation. The first thing that you're going to want to pay attention to is that when you start insuring more expensive conditions, the overall cost of that insurance is naturally going to go up. And second, not properly rating individuals according to their medical status or their health history is going to increase the price for everybody. So basically what that means is those 20-something kids that are going to be now mandated by law to have insurance are going to be paying a much more higher rate to offset the cost of the elderly and the sick than they would ever have been on the current system. Good, bad, or indifferent, those are 2 potential side effects of insuring everyone for everything. Next, the big sticking point of the constitutionality of the law, the individual mandate, or as healthcare.gov references it as the individual responsibility. Basically what this means is that everyone who is able to afford coverage will be required to purchase basic health insurance coverage or pay a fee to help offset the cost of uninsured Americans. And that's coming directly from healthcare.gov, the website that has been set up by the government to exist as a resource for the healthcare reform law and all the changes that are coming with it. If coverage is not available to an individual, they will be eligible for an exemption. You do also have the option to apply for a waiver, asking not to pay the assessment if you do not qualify automatically. Well, what does that mean again? Like I said before, in order to insure everyone for everything, it's necessary to have a safeguard in place to prevent people from buying insurance only when they need it. The individual responsibility or mandate or tax, or really whatever you want to call it, is designed to deter people from purchasing health insurance on their way to the hospital just before they incur hundreds of thousands of dollars worth of medical treatment. Does that sound like a good system? No, absolutely not. Because if you were to only buy insurance when you needed it, there would be no money to treat your condition when you actually needed it. So if that was the case, that's why they've included this individual mandate to protect against the abuse of the system. Next is the insurance exchanges. The idea of the exchanges is if you do not have benefits available to you through your place of employment, they're going to be a place that you can directly purchase affordable health insurance. These exchanges are going to be set up on a state-by-state basis. The goal, as again stated by healthcare.gov, is to create a transparent and competitive insurance marketplace where individuals and small businesses can obtain coverage. Again, what does that mean? To be honest, there is so much uncertainty surrounding the exchanges, it's almost impossible for me or anyone to say what they're going to look like come 2014. We don't know what kind of plans they're going to be sold. We don't know which insurance companies are going to be selling them. And more importantly, we don't know who's going to be allowed to assist you in that process in selecting a plan that's going to be right for you. Next, ensuring free choice. Workers who meet certain requirements and cannot afford the coverage available to them, they would then be allowed to take whatever funds their company would be allocating towards that health insurance through the company for that employee to then attempt to purchase coverage through the exchanges. Again, not to be redundant or repeat myself or think that I'm crazy, but having the exchanges be such a cloud of uncertainty at the moment, I mean, the specifics surrounding the requirements that employees must meet to take advantage of this are very murky right now. It's really too early to tell if there is a crack in this provision and how big it might be. Lastly, they're going to eliminate annual limits of insurance coverage. The law prevents new plans and existing group plans from setting annual dollar amount limits on insurance policies. Well, what does that mean? To be honest, if your health insurance policy was worth the paper it was printed on, any plan that I've ever sold to anybody in the last 2 or 3 years has had a minimum of a 3 million lifetime max. Now that's pretty substantial. More commonly would be a 7.5 million lifetime max on the insurance policy. So now, is it possible to reach those limits? Sure. But the limits on the policies previously were more than sufficient 99% of the time. So what about you? Do you think any of these provisions are going to make your coverage better or more affordable? If so, what is it? What are you most excited about? What do you think is really going to benefit you? If not, what are you afraid of the most? What do you think isn't going to work? What did they get wrong? What would you like to see better? Those are 5 things that you're going to want to look out for in 2014 as the healthcare reform law gears up to go into full force. So as always, there is a blog post on jingolainsurance.com, which you can find linked in the description to this video. So feel free to head on over there, check that out a little bit more if you feel so inclined. But as always, I am Joey Jingola with Jingola Insurance Agency. Take it easy, everyone.